Alrighty.
I'm all right with the time change. But I prefer this time than the way it is when it's the other way.
It's hard getting out of bed when it's pitch black out, so that's one good thing. Is now it's light out when I take my daughter to school. So, okay, we are on our last chapter. Yay! Yeah, I know. It's like it doesn't feel right, but we'll be focusing a lot on the payroll project from here on out. So yeah, this is our last chapter, and if you've looked, obviously you've done the little adaptive learning quiz, so you know it's really about the journalizing, the updating to our accounts when we've already done all the things we've learned to do, like calculate taxes and FICA, and OASDI and HIE and federal, state, any voluntary deductions, FUTA, SUTA, all of that. So now we're really just learning the journal entries, which some of it is, if any of you remember financial accounting, we did cover some very basic payroll entries. And so these are really similar or the same structure as what we learned. So it's really nothing too bad, I don't think. So we're going to do the chapter 6 practice, and then I went ahead, and you hopefully saw it on Canvas. I did just do like a video instruction on the project. So whenever you all are ready to complete the project, you're more than welcome to start it. If you scroll down to the bottom, it's under the last unit here. So you do have the payroll project. That help video is just me kind of talking you through the project. And then there is like a project help that you can complete first within Cengage that kind of gives you an idea of what you're doing as well. So hopefully that will help. There's a part 1 and a part 2. So you're going to do 2 payrolls, I believe, in October and 2 in November. So it'll be the full payroll process, but thankfully you don't have to go in and manually calculate taxes. It'll do that for you. So you're really just doing some inputting, verifying journal entries, kind of just simulating what it would be like more in a computerized payroll environment where you wouldn't be physically calculating their income tax withholding, but you would be putting in their allowances and deductions and all of that. So it is a little lengthy. That's why when we're finished with chapter 6, the rest of the class is just focused on getting that completed. So as you can see from due dates, I went ahead and just left chapter 5 homework open. So chapter 5 homework and chapter 6 homework are due next Wednesday. So you have a complete week to get all that done. Then you'll be ready for the test. It's already open, so you can take exam 3 whenever you're ready. It's due after Thanksgiving. We will have the whole week off for Thanksgiving, so we won't have class, what is the 21st? So we will come back on the 28th, and at that point it'll really just be open lab time. So any of those days, the 28th, and then what is it in December? So we'll meet on the 28th, and then again on the 5th of December. We'll kind of play it by ear on the 12th there. But the week of the 28th and the 5th, and actually next week too, on the 14th, those will all just be open work days. So if you have questions with next week, any of the homework, but moving forward, if you start the payroll project, you want to come work on the payroll project in the class time, you can come and do that. If you have questions that you run into on the payroll project, we'll use class time to work on that, okay? So we won't have any more, this is the last quote unquote lecture or example, but we will still meet. It's just optional, of course. So any questions on the schedule? We're kind of down to the end here, right? I mean, after this week, we really do have like 3, I think maybe 4 class meetings before finals. Again, as far as your payroll project will be due December 12th, and then your final exam is optional and it's due then as well. So by then, obviously you'll have had a couple weeks that you took your last exam, so you can look at your exam scores. And if you choose to take it, if you've missed one or you scored a low grade or just not the grade you wanted, the final exam will replace a missed or low score. If you're happy with your exam scores, you don't have to take it. If you take it and the final is your lowest exam score, then it will be dropped. So it doesn't hurt you. It won't hurt you to take it, but it can help you. So just a reminder on that. I think that's it as far as what's going on. So I guess I already said that, but again, any questions on exams, final, project due dates, anything like that?
What is the project? Is it about a grade? Is it of an exam? Is that about what it's worth?
Yeah, I think it's 120 points if memory serves. Let me pull up. I had it here. Oh, 160. So it is a little bit more than an exam. And it still has check my work. So you still have that opportunity as well. I will say if you check it if you're in the middle of doing the payroll, you're going to get a lot of errors because it checks the whole payroll. So don't be concerned. You know, it's better to probably complete the whole payroll than check it. And the first one really does a good job. When you download the instructions, it gives you kind of answers to check as you go and screenshots, and it steps you through the whole process. So as long as on that first payroll, you just follow it step by step. Honestly, I would probably print out the first one because then you can use those steps on the subsequent payrolls. It would just be different numbers. So you would need instruction. Every time you open up a new payroll, there'll be instructions. Okay. But that first instruction for that first payroll is more of a tutorial. So it makes it kind of nice. Most of the time, last time I taught the class, errors were like just little small things that threw something off. You know, like we forgot to check one box or forgot to change one allowance. So if you run into an error, you know, don't spend hours searching for it. Feel free, you know, you can use the Ask My Instructor through Cengage, and then I can see what you've done. And usually because I have all the actual end reports, I can find your error much quicker. So feel free to do that and I don't want you like spending hours trying to find, you know, why it's counting. It may see you have 20 items wrong, but it's all just really one error, if that makes sense. That's, you know, embedded in several things. So I just wanted to throw that out there too, if you're working from home or from somewhere else, that don't spend numerous hours. If you have an error, please use Ask My Instructor. Do it. Right? And then it's like, it's something really simple. And then you're like, oh my goodness. So I don't want you guys stressing out over it. So use the Ask My Instructor, send it to me. I can pull it up, I can compare it, and I can find what you did. And we can correct it. So yeah, that's the payroll project. You'll have plenty of time to complete it. I mean, some people knock it out and get it over with if you have the time to just sit and do it. And I do recommend, you know, at least giving yourself some time to, you know, don't go in it for 15 minutes, like sit down for chunks of time so you can, you know, kind of work on it and remember where you left off. So I think that's it. It's not too bad though. So chapter 6 will wrap up what you need to know, you know, to actually complete that payroll project. And again, it's really just journal entries. So we're still doing some calculations, but a lot of it they give us too, so it's not too bad. So the main structure, and they, you know, I set it up where you have drop downs too. We're looking at based on both the employee withholdings and the employer taxes paid. So we're going to have 2 payroll entries for every payroll we run. Well, actually 3. But you'll have one where you're showing the employee's deductions and their net pay, you know, their gross pay, all their deductions and their net pay. And then you're going to have what the employer pays or withhold, you know, keeps in taxes. And then the last journal entry will be actually paying off whatever liability accounts we created in those journal entries. So for this first one, it says Hal Ruther, an employer, is subject to FICA taxes but exempt from FIDA and SUDA taxes. During the last quarter of the year, his employees earn monthly wages of $8,500, all of which is taxable. The amount of federal income taxes withheld each month is $1,040. So they want us to journalize the payment of wages and record the payroll tax on November 30th. Well, he doesn't have to pay federal or state unemployment. So really, we're going to start on this first entry and again do the actual payroll expense, okay? So it actually starts on November 30th. We start with wages expense. Wages expense or payroll expense, they're both the same. And that's always for the gross pay, okay? So I would just debit wages expense. In this case, the $8,500 monthly wages. So that's the total expense to the business of employing these employees, okay? Well, they told us that all of it is subject to taxes. So we know we're going to have to pay both, the employee is going to pay both FICA, Social Security, and FICA Medicare. So what we do is we debit or credit those, to FICA taxes payable. So we'll have a FICA taxes payable for Social Security, and we'll also have a FICA taxes payable for Medicare. Okay, a little bigger. Well, they told us all of the wages were taxable, so I'm just going off of my typical, how much is the typical OASDI? 6.2%. Very good. So I'm just going to take 8,500 times 6.2%. Okay. So how much would be the withholding for FICA Social Security? Very good. $527. Okay. And then for the Medicare or the high, we know it's what percent do we take for Medicare? Very good, at 1.45%. So what's my Medicare withholding? Very good, $123.25. Okay. So those are the withholdings for all of our FICA taxes. And we put those in payable accounts because we're withholding them from the employee's paycheck, and then we will pay them to the Social Security and Medicare, to the government. Do what?
It's in a holding pattern.
Exactly, it is. The only other deduction that they really have here is federal income tax. So that'll be what they call FIT, Employee FIT Payable. FIT stands for Federal Income Tax. And they gave us that amount. They told us it was $1,040. Okay, $1,040. Well, they told us to journalize the payment of wages, so I'm assuming that we are printing these checks and paying them today. So when that's the case, we're just going to credit cash for their net pay, okay? So net pay, of course, is the $8,500 minus those 3 withholdings. Okay, so I get net pay as $6,809.75. So that's how much paychecks are cut for. We would, however many employees, the total checks written would be $6,809.75. Now, the second journal entry is to record the payroll tax. Payroll tax is the expense that the employer has to pay, okay? So we're truly just going to debit payroll taxes. And we don't know the amount yet, but we know employers pay federal and state unemployment, and then both FICA, OASDI, and FICA High. Well, they told us that this employer is exempt from federal and state unemployment. So in this case, we don't have to worry about those withholdings. So the only payroll taxes that this employer has are your FICA, Social Security, and FICA Medicare. And if you remember, it's an equal contribution. So it's the same amounts. So I would put under this one, FICA taxes payable, OASDI, and FICA taxes payable, high. And the OASDI would be $527. And the high is still the 123.25. So to get my debit amount there, it's just the sum of those two. I just need to add these two up to figure out my total payroll tax. Okay. Very good. Yeah, $650.25. 650.25. And then there is a Part B. If you scroll down, it says prior to posting this November 30th payroll, all of our payables, our FICA payables and our FIT payable had zero balances. And we need to pay the FICA taxes and income tax withheld that was withheld on November 30th. So all we're showing here is the electronic transfer of the payroll taxes on December 15th. So what I need to do is just add up those payable accounts, okay? So that first one, we would do what? FICA, taxes payable, OASDI. Well, it's 527 plus 527 because we both have the employee withholding and the employer contribution. So we add those two together. So it should get what, $1,054?
Yes.
Good. And then my next one was at $1,054 for OASDI. And then we have the high, or the Medicare. Well, it's $123.25. Very good. We're just going to double it. So $246.50. And these are both debits because we're paying them. We're sending the payment to the government. And then what's our other withholding, our other payable account that we're paying? And we are going to pay it all in cash, but what's our other withholding?
Federal.
Yeah, our federal income. Good. So it'll be our employee FIT payable. We just had the $1,040 that we're also paying. And then that all would be a credit to cash. So just add them up. So all total, it is what? $2,340.50. So that's just showing the actual payment of those withholdings. So whether, you know, as you probably read in the chapter or as you will read, we have different deadlines as far as when we submit those to, you know, the government entity. But in this case, ours are due on December 15th. And so we have submitted all of those payments that we withheld. Okay. Any questions on that one? This stuff's not too bad. And then it's the same structure for all the different journal entries. This chapter is not bad. You know, getting back to journal entries, it's okay. Let's see. If you go to the next one, it's really the similar stuff. We just have it in a different format. Here we have Volcra has a semi-monthly payroll of $67,000 on September 15th. And then they give us all the taxables. So here, the total payroll is taxable under FICA taxes high. $63,850 is taxable under OASDI. And $10,300 is taxable under federal and state unemployment. The state contribution rate for the company is 4.1%. The amount withheld for federal income taxes is $9,911. And the amount withheld for state income taxes is $1,410. So we just need to calculate these different withholdings based on the taxable incomes provided. Okay, let me bring up Part A here. Try to make this where we can get to it a little bit better. So we're doing the same journal entries really. Now we're also dealing with unemployment, which falls under employer contributions. But that first one, the only difference in our structure here is that we also pay a state income tax, which is similar to here in Oklahoma. We know we have to pay state income tax. So as far as our payment of wages, we're still starting with a debit to wages expense. And that's still our full amount of $67,000. Okay. I'm going to close that off so we have room here. We're also still going to withhold FICA OASDI. Here they just told us though that our taxable amount under FICA taxes OASDI is $63,850. So some of our employees, or at least one, has met that limit. You know, the 18.5. Yeah. So at least one of our employees has hit the OASDI limit, and we're no longer taking OASDI taxes from them. So they gave us our taxable limit though, which makes it nice, right? We don't have to figure it out. So we're truly just going to take 6.2% of the 63,850. Okay, so that's what, $3,958.70. 3958.7. So this one's just really reading all the taxable incomes. They told us that FICA taxes for high, the total payroll is subject to that. So I would do my FICA taxes payable high, and that would be based on the full $67,000 of taxable wages. So what's my Medicare withholding? Yeah, 1.45%. Make sure you're doing it off of the full 67,000.
Oh, okay. 67?
Yeah, they tell us that the total payroll is taxable under the Medicare, the high. Yeah, very good. $971.50. So this is the only time this one gets tricky, is we have different taxable. If you remember, Medicare is all of their employees' earnings are subject to Medicare. And in fact, they have to contribute an additional amount if they make over a certain limit. So Medicare will be at the full taxable wages of $67,000. Yes. Yeah, we have a limit on Social Security, but not on Medicare. Our next one is just our federal income tax payable. So we have employee federal income tax payable, and they truly just gave us that one, which is nice. And it is $9,911. $9,911. And then we have state income tax. So employee SIT payable, SIT. And they gave us that as $1,410. $1,410. And that's the only deductions we have for the payroll itself. So again, you're going to take your total wages expense and subtract out all four of those deductions to get what we paid to our employees. So we're going to credit cash. And once you guys get a number, you can just shout it out.
$507,488.
Very good. Yeah. $50,748.80. Okay. So that's the amount that we're paying in payroll. Cash out the door. $50,748.80. Okay. Now our payroll taxes are a little bit different on this one because we have the state and federal unemployment. Okay, so under payroll taxes, we still start with payroll taxes. That'll be debited for the full amount, but we need to calculate that. So I'm just going to start with what I know, which I know we're still paying the FICA taxes on OASGI, and that's just the same, right? So it's the $3,958.7. And then same with my high. My high would be $971.50. So those are equal. And then I just need to calculate federal and state unemployment. Well, they told us the state unemployment rate is 4.1%, and 10,300 of our wages are taxable under FUTA and SUTA. So only 10,300 is still subject to any unemployment taxes. So when I'm calculating my FUTA and SUTA, that's what I'm going to use. Looks like they want FUTA first. So FUTA taxes payable Well, we know that if we contribute to state unemployment, we get a credit towards federal unemployment, right? We did that all last chapter. Super fun stuff. So we know since we're paying towards state, we're going to pay 0.6% towards any taxable income. So we'll take our taxable income times 0.6%. Well, again, they told us 10,300 is taxable. So it's just 10,300 times 0.6%. Okay. So I just have to make sure I read, how much my taxable is there. So in this case, should have FUTA taxes payable $61.80. $61.80. And then last but not least, we have our SUTA taxes payable, which they told us were 4.1%. They gave us the state contribution rate. So again, we're going to take the 10,300 that they told us was taxable times 4.1%. Very good. $422.30. $422.30. And then once I've calculated all of my employer payroll taxes, we just add them up. So what's my total payroll tax?
$54.14.30.
Very good. $5,414.30. 5414.3. Okay, so the difference there was we had different levels of taxable income, which we've seen as we've progressed through the book. Usually federally, only the first 7,100 of each person's earned wages are subject to unemployment. States can have different limits, but they just told us our taxable income. So again, that makes it a little easier. Any questions on that one? All righty. Well, we'll move on to number 3. Oh, is there a part? Yeah, no. I'm just skipping it. I forgot there was a part B. Thank you. On the journal one, it's like, oh yeah, I'm just ignoring that there's a part B. That's another long one. No. Okay, so assume the employees of Volcra, let me get rid of that one so we can see it. Assume the employees of Volcra must also pay state contributions, which is a disability insurance, of 1% on the taxable payroll of $62,100, and the employee contributions are to be deducted by the employer. Journalize the September 15th payment of wages, assuming that the state contributions of the employees are kept in a separate account. So that's a lot of wording, really just to say that we are adding in one thing. So I don't think I printed that one, so we'll just make sure we get it right here. I think I did. So our wages expense is the same. Okay, our total wages expense stays the $67,000. Okay, the $67,000. And it doesn't change our FICA withholdings or anything like that. We just have an additional withholding that we're adding in. Okay, so we're still going to do FICA taxes payable, OESDI, and that is still the $3,958.70. Okay. And then we still have our FICA taxes payable high. And again, it's the same amount it was, $971.50, $971.50. The next one they prompt us for is actually that disability contributions payable. So I'm going to choose employees disability contributions payable. Okay, so we're paying disability insurance. Well, they told us it was 1% of a total taxable payroll of $62,100. So what is my payable for? Very good, $621. So I just take the 1% of the taxable payable they gave me. Okay. And then the rest of it, your other withholdings are the same. You have the employee federal income tax payable. It is still $9,911. So FIT payable is $9,911. And then we have SIT payable is still $1,410. But now we know our net pay is going to be a little different, right? Well, the easiest way I would do it is I would just take our past one and subtract out the 621. So you don't have to resubtract everything, right? So our last one was 50,748.8. And we just need to take out, the only thing we've changed is we're also taking out the 621 for disability. Okay. So again, we're really taking the 67,000 minus now all 5 of these deductions. So now we should get $50,127.80. Okay. So it just reduces our net pay to our employees since we're withholding an additional tax there. Not tax, but a state disability insurance policy. Are there any questions on that one now that we finished it? I was just trying to, get away from the whole half of a problem. This next one is just another example, and we have a little different on the withholdings. So this one says Kip Bowman is owner and sole employee of KB Corporation. He pays himself a salary of $1,500 each week, and then it gives us all the additional tax information. Well, he's still going to contribute OASDI both from his paycheck and then from the company, so it's still the match of 6.2% on the first $118,500. Medicare is still 1.45%. Federal income tax is $232 per pay. State income tax is 22% of the federal. Okay. Federal unemployment tax is the standard 0.6% on the first 7,000 of wages. Their state unemployment for him is 0.05% on the first 14,000. And then he also pays 3% of his gross pay into a 401k plan. He has a child support garnish of $100 per pay and health insurance of $95 per pay. So really this one probably emulates a more robust or correct, payroll entry, because we know if we have full-time employees, they're going to have more than just your standard FICA and unemployment and things of that nature. Furthermore, we don't really get into it in these entries, but the employer could have higher payroll taxes. A lot of employers pay part of health insurance or part of, match into 401k. We're not going to get into all of those intricacies, but, it's just good to kind of understand that obviously this gets much more complex, or it can. And it's always fun. So, let's see. On this one, since we are dealing with multiple pay, schedules here, they tell us that we're doing the pay for the week ended June 2nd, and they actually give us his to-date pay. So before this June 2nd paycheck, he has earned $31,500. And we know that's important when we're dealing with limits, okay? Well, he's nowhere near the Social Security limit, so all of his wages are going to be subject to FICA Social Security. We also know that his high tax is all subject to that, okay? Let's see. But when we get to unemployment, we can see that in this paycheck, he's not going to contribute anything to unemployment because he's already met those wage limits. Okay, so we can really just disregard the unemployment. So we're really just going to calculate all of his withholdings, including his garnishment, retirement plan, health insurance, and all of that. Okay. So again, when we're doing payment of wages, we always just start with the gross pay. So the wages expense of $1,500. Okay, wages expense of $1,500. And then we just calculate his withholdings, right? So we have FICA, taxes payable, OASDI. What did you guys get for that? $93. Very good. So FICA, OASDI, $93. Then we have the high. Perfect, $21.75. They told us his federal income tax payable. So the employee federal income tax payable they gave us was $232. $232. And then for state, they told us it was 22% of that 232. So what is his state payable? Very good, $51.04, $51.04. His retirement plan contributions payable would come up next. That's his 401k. He elects to contribute 3% of his pay. So what did you get for that? $45, good. $45. Then we have a garnishment, and they told us that was $100 for child support. So we have a garnishment payable of $100. And then we have his health insurance. Health insurance, it's on the wrong line there. Health insurance premiums payable are $95. Okay. So those are all the withholdings for this employee, who's also the employer. It's always fun, right? Now, in this case, they didn't state that he's contributing to any like pre-tax. You know, a lot of times 401k contributions are pre-tax, but since he is the employer and the employee, this is not a qualified fund. But if it were, we would obviously take that out, you know, of the taxable income when we're calculating. And it might have already been taken out of our federal, you know, income tax. We're just not seeing that. So they didn't give us that taxable income. So again, we withhold all of these from the paycheck, and then, you know, those retirement contributions, the company is responsible for paying those to whomever is the holder of that account. And then the garnishment obviously is going to the state. You know, all of that gets paid out. So what is the cash payment, or what is his paycheck after all of his withholdings? Anybody calculate that? Very good, $862.21. Doesn't look so good compared to the $1,500 where we started, right? So $862.21. And then the payroll taxes, well, as we talked about, he's already earned $31,500. So he's already paid in all his federal and state unemployment. So he only owes payroll taxes for both OASDI and high. So payroll taxes, we're going to also be FICA taxes payable OASDI and the high. And again, they're going to be the same amounts. So OASDI is $93 and high is $21.75. So the total payroll tax is $114.75. Okay, $114.75. Okay, so obviously that would be different from the first paycheck of the year, where we would, you know, also have to pay payroll taxes for state and federal unemployment. Okay. So that's just showing what it would look like when we have garnishments, health plans, you know, 401k. I mean, if you ever looked at paychecks, you know, you can have a lot of withholdings, right? I know, mine are kind of like crazy. So there we're seeing all of the deductions, and then of course the net pay. Any questions on that one? All righty. Last one, woohoo. This is just looking at a little bit different, where we're looking at vacation benefits. So we also have to account for, you know, if we give sick time, vacation time, because they do account for that differently. So we do keep separate records of those. So in this case, it says the employees of car company are entitled to 1 day's vacation for each month worked. Okay. The average daily pay for each of the 50 employees is $130. So when they reported that vacation expense at the end of each month, you're looking at $130 for 50 employees, okay? Because it's 1 day of vacation. So 1 day of vacation, $130, 50 employees. That's an expense to us as a company of $6,500. So every month we would log this vacation benefits expense at $6,500. Okay, and that's pretty common. And then at the end of April, Hernandez company, did they just switch companies on us?
Yeah.
I just noticed that.
Oh,
It's two
that's like
separate
the
companies.
example. And then
Oh, is that
That's
the
the real
example?
question.
Okay, thank you. I'm like, I'm going crazy. I'm losing my mind. Thank you. Usually the example's like separate from the question. Oh, okay, good times. I guess it is. I can't see it on the screen though, but on my computer screen I can see it in the beige. Just kidding. It's been a long day. Okay. Thought I was losing my mind there for a minute. I think I am. At the end, do it.
Sanity's overrated.
Right. It's actually more fun to be crazy.
It makes life more interesting,
It does.
especially when you see things that other people can't.
Yeah, there you go. And it makes it more fun for you all. Okay, so at the end of April, here's our actual problem. Hernandez company had a balance of $37,910 in their vacation benefits payable account. So it's kind of cut off here. During May, employees earned what did they earn? Additional $2,790 in vacation benefits. But at the same time, some employees used vacation days that amounted to $2,050 of the vacation benefits. The $2,050 was charged to wages expense when it was paid in May. What adjusting entry would Hernandez company make at the end of May to bring the vacation benefits payable account up to date? So vacations benefits payable is always credited every time, you know, we accumulate or we earn more vacation pay. So in this case, since we had a month where some vacation benefits were used, we actually just need to add in the difference, okay, to bring it up to date, what we still owe in vacation benefits, okay? So when we come, I'm going to click on this vacation benefits payable tab. When we do, basically it's an adjustment, an adjusting entry. I'm still going to follow the same format they gave us in the example. So I'm still going to debit vacation benefits expense and credit vacations benefits payable. But the amount that we still owe them is the difference. So they earned $27.90, but $20,050 were taken in the month. So I'm just going to subtract to get what, $740. And that's how much gets debited to benefits expense and credited to benefits payable. Okay. So that was just a little bit of a change of pace because we're dealing with benefits. Again, we have to always estimate, you know, what the cost is of offering those benefits to employees. And then we actually expense it out to wages expense as they take those benefits. And they told us they've already charged that $2,050 to the wages expense. So that's why we only have to increase our payable and our vacations benefits expense by $740. So that one's just doing an adjustment to our benefits. Any questions on that one? All right, well that is it for chapter 6. Like I said, it's a little shorter as far as, you know, you're really doing kind of similar things. Some of it is, you know, kind of cumulative. We've learned it over the course of the semester. But that's what I have. If you guys don't have any questions, you're free to stay and work on homework, or, you know, we do have about 24 minutes left, or you're free to get out of here and go home. So,
yeah, can I get your
sure, absolutely.